Hello and welcome to another live trading session. Today is Tuesday, May the 28th. Hope everybody had a nice long weekend and is ready to trade. So let's do just that. But before we go to our platform and start doing some trading, let's talk about a couple of things. I wanted to answer. Somebody asked me on the YouTube here that they've noticed that I sold one NP, not one naked put in ES, but only three MES, and that leaves us uncovered. But I wanted to just kind of explain that we are not trying to cover each of our trades completely with the put debit. That's not the idea. We're trying to build a little wall of put debit spreads as we go along, because as you know, we sell naked puts at 90 plus days, and you close them at around 60%. So that's on average 30 days. But put debit spreads are, around 70, 80 days, and they stay on even after we close naked put. So they will accumulate over time. So it's not a goal to have one for one. It's goal to have more put debit spreads over time than naked puts, if that makes sense. But I just wanted to briefly address that. And also the second question is they noticed that I don't have a buying power usage per individual trade. So that's correct. I don't have, and if you take a look here on the main page, when you take your metrics daily or whenever you put a trade on, there is no specific buying power per trade. That's kind of like a side, something that we don't really track necessarily individually. What we do is we track the buying power usage overall for the account, and that's shown right here. For example, I'm using 11.5% of my available buying power, and then that's limited to a certain percentage to keep us as safe as possible. And the formula for that one is 2.5 times VIX. This is when we would pause. We would no longer put any trades on until that is back in line with a maximum of 45. So even if the VIX is higher, and it would allow 2.5 would be higher than 45, we would still limit at 45, because by the time we add on another trade, we would be over 50, and we don't really want to be over 50% in buying power usage when we put on a new trade. And to help with that, there is also, like, if you go to this cell right here, or this column, and you go to format and then conditional formatting, you will see that it will turn red if this value is over 45 or over 2.5%, the 2.5 times the column F, which is VIX. So that would turn on red and alert us to the fact that we might be overexposed according to these metrics. So that's something to keep in mind. And by the way, if you would like to have a spreadsheet that we use with all of the different tabs and everything, and including the detailed trading plan, all you need to do is join our Discord. You can cancel at any time. You get to keep the spreadsheet and the plan, and the link is in the description below. So with that out of the way, let's see where we stand at the moment. I already filled this up, and we're looking good, in line to put another trade on as per the schedule here. You can see our buying power is 11.5%. And by the way, I added a couple of new metrics here to keep even better eye on the risk, and then we can use these numbers later on to calculate some new, to fine tune the parameters of the trading plan. And those two columns are Vega. We're going to try and keep Vega of the portfolio occasionally every time we do the metrics, just to see how it goes, and that'll give us an idea of where we are in the future. If this number all of a sudden is much higher or something, that doesn't mean that this number is exact. Vega can be very tricky. Further out of date options have Vega that's not really exact, so you don't take this number at its value, but it does give you an indication. Then also, I introduce here units at risk. This is in addition to the notional exposure, which we have right here. Notional exposure takes the value of all of the naked puts and calculates that against the net lick, where the units at risk actually tells us how many open naked puts we have at any given time, the naked puts that are still at risk, and then it converts them here to either ES or the SPX. If we, for example, if we were using portfolio margin, it would turn it to SPX units. Even if you, for example, like myself, I'm using MES, then we still want to keep track in ES units, because when the account is large enough, we can smoothly transition into ES and keep the values the same. And what it is to simply multiply by 10 to get, or divide by 10 to get the ES value. So for every 10 naked puts in MES, we'll get a value of 1 for the ES. So right now I have 2.4 naked puts in ES value. And this is important because we can keep track. And over time, once we have enough data here, maybe a couple of years worth of data, then we can start drawing some parallels between the VIX, the units at risk, the delta, and the spikes in the VIX and moves in the market, how we reacted to different exposures. And we can then maybe fine tune the strategy, put some new nuances on. That's what it is, just so you understand why it's there. And now let's take a look what we need to do. Our weekly target premium is around 1,000. And if you take a look at the new sizing sheet, which is a simplified sizing sheet that keeps you in line with your individual trades. And for accounts over 30,000, we want to make sure that our individual trade, when we sell naked premium, we don't go over 1% of our net lick. So for example, if you had a $50,000 net lick, you don't want to be selling more than $500 in an individual trade. That could be a couple of, MESs, 2-3 MESs, depending on the current VIX and environment. The reason is because when you implement the 200% stop loss, that will give you maximum loss per trade, assuming that you exit at a stop loss of 2% of your portfolio value. So that keeps your size in line, in check. Given that we are at 68 or something, we don't really want to be selling more than 680 per trade. And we can go down, that's no problem. We just don't want to go over. We've been doing like, somewhere 400 or 500, it doesn't matter, somewhere in that neighborhood. So if we go back here, and let me just go here. If we go back here to the main, we said we have around 1,000 for our goal. So we'll see what the market gives us, but anywhere 455, 600, all the way up to 680, but no more than that. So 1% of the net lick should be on the upper side. So let's start. By the way, let's just check this here again. With the VIX at 12 and a change, we're looking at around 13 delta. So if we go here, we go to trade. Let's see, we can go to 114. If we go to 13, we don't have a 13 here. So let's see, let's just see what we have here. Maybe we can do 2 of these. The platform is a little bit giving me these black marks. I hate that. Sometimes it's distraction. So we could go a little bit higher, but 16 is a little bit higher than we like to go. We could go a little bit under, that's 10, or we could sell more at the same place where we sold before, but that gets tricky for trade tracking. So let's just take a look real quick and see in shorter expirations, like 80 days, even though that's not ideal. Let's see. If we go here to 13 delta and we go, let's see, if we go with 3 of them, it's hard to even see what we get 405. So do we want to do that? Yeah, we could do that and get let's see, what we can do. We can try and see if we go here and sell more. We can see if we can find a way to record that easily, because that would be important, because we're gonna run into this often. So we might as well find the best way to deal with that and go from there. So 480, that sounds good. So for 3 naked puts, let's go ahead and try and see if we can do that. As usual, we have to probably just pedal a little bit. place, go down a tad. See, okay, so that closed for 31.75. Let's do the usual math. 31.75 times 3 and 10 times 5 for the multiplier, so 476, and then times 0.2 gives us the maximum spend, 95, and then we want to usually take a little bit out for the commissions and fees. We have 5 lags, so around 12, 13, up to 15. So, 80, 82, $3 we can spend. So let's go and see what we can get for that money. And we are looking for either 75 or 100, depending on the pricing. Either one will do. So let's go to 64, and let's go around here. Let's go nice round number. Let's see. If we go, let's just see what 100 would give us. 60 and 60. That would be 87. That's a little bit on the high side, but we could, let's just see if we go to, let's go to 40. That's 80. That's nice. We're close to, we want to be around 30 delta. I mean, it's always a little bit of a trade-off. We can go a little bit wider, like go 100 instead of 75 and go down here, or we can go here and then just go a little bit up and still get, let's see, go a little bit short, narrower spread. So we can go to 90 wide in this particular case and lower the cost, but get a little bit higher delta. You know what? We might as well do this. This looks good. So let's go ahead and close this one if we can. It's unusual that we sell and buy a 90 wide, but this is what happens when you go a little bit shorter in duration. We could have gone for 80. Actually, let me just do that. We didn't even check the, let's cancel this one. And let's go to 80 just to see what we can get here. And go to, let's see here. Let's go for a round number and then just go. All right, we can go 75 wide here for, this is actually nice. I think we'll go with this 34 delta. Let's just close this. And again, we'll have to give in to the market a little bit, pay up a little bit right here. And we're paying a little bit more than the mid price, but still not takers. So let's just wait for a second. See, 1650 and 1637. We don't really care about quarter here. We just want to close this in a reasonable fashion. Okay, so 1675. So let's go ahead and record this. We go to UTS. This is trade 70. MES. Today's date. And the VIX at opening was 1265. And delta, I don't remember, was it 13? Let's see. It was 12 actually. Okay, so we'll do that. So it's 12, and the strike was same as so 48.50, and it was at 114 days, and we got 31.75 for 3 of them, and that's it. And then here we had MES again, and what we did was 52.75, 52.75, 5200. It was 80 days, and we paid for that 1675, I think, minus 1675, and we did one of them. Let's just double check. 1575, 1675, I'm sorry, 1675. All right, that's good. So later on, I will try to figure out how to get this recorded once we close them. I need to find some shortcut because you see what's happening now. We have two strikes here, the 4875. We have 3 here and 3 here, but they're not at the same. They're not sold at the same thing. So maybe I can either average these two and split them if it's even equal number of trades or something to that effect. I have to see what's easiest. Let's take a look at the main tab again. And what we want to do is record these new values just to make sure that we have it now with increased delta and all of that. So 90 and 46. 90 and 46. Our Vega is minus 574. Our buying power is going to be a little bit higher than it was. Report. So 13.5. 13.5. We went up to 2.7. Obviously, we added 3 MES, which is 0.3 of ES, and Netlink is probably the same. So that's all we have here. Our next trade is scheduled for Thursday. So we'll see how we look. Any questions, anyone? If not, I will see you all on Thursday or in the Discord before that. Have a fantastic rest of the day. Bye.